Well, good afternoon, investors, and welcome to the March 19th edition of Bull Sessions. My name is Mark Robertson. I'm founder and managing partner of Manifest Investing. I'm joined here by my dear colleague and magnificent mathematician, Ken Kavula.
I'm reading a note, Mark, from Nick out in the audience that basically can be summed up by saying, "Is ignorance bliss?" about the stock price of Nvidia.
There's a whole lot of bliss floating around, that's for sure. But we'll try to demystify as much as we humanly can, and I don't know what we know about that, but we are also joined here by our special guests, Matt Spielman from Houston. Good afternoon, Matt.
Good afternoon, guys. There are no called strikes in investing, but comparison is still the thief of joy.
There you go. And Kim was threatening to go on vacation. I think she will do that, but she is able to join us here this afternoon. Good afternoon, Kim.
Well, hi, everybody. Hope you're having a good day.
She's probably got hundreds of shares of Nvidia on the side, and that's probably financing all of her adventures. And I did notice, for those out there that are wondering, our Ardelyx is up a few percent today, so it's giving us a break from all the heartache.
With no news.
With no news. All right, here is our agenda.
Hope springs eternal. I'm going to crochet a pillow for you, Mark. Okay.
Yeah, send it.
Well, you better make one for me too, Ken.
All right. Speaking of hope springing eternal, we are going to get a little chippy, and we're going to ask that bubbly question and concentrate on Nvidia. We are going to look at some clubs on the move up, talk a little bit about Buttonwood, but I thought I'd share a little story with you. This is actually from a few years ago. I made the mistake of allowing a little bit of dish soap to enter my dishwasher, and I went to the grocery store and I returned to that scene that you see in the middle of the page there, literally a house full of suds. And I just thought it was appropriate for our discussion about, is it bubbly or not? I found it kind of interesting that tidal wave of suds actually has the buttonwood tree in its grip. So it's pretty relevant. I mean, I can remember. Do you remember when that happened, Ken? I sent pictures.
I remember, but it's getting pretty bad when you got to take 30 seconds to explain the opening slide, okay?
Well, I will tell you, I did hashtag things I wish they'd have taught me in engineering school. Again, public service announcement, be careful not to put dish soap in your dishwasher. It's an interesting phenomenon. All right, that's enough for now. I think we may have announced this, but I just wanted to be sure. Portillo's is coming to Houston again. They're opening more locations. And I think they might get closer to Matt this time around.
Yeah, me and Ann, not far, actually probably on the way to many of our club visits. So maybe we'll do them remotely.
Fantastic. Well, this is our weekly reminder that Portillo's is not a sponsor of this session, but they should be. All right. Here's our standard disclaimer. Again, we're going to talk about real companies in real time using the methods, techniques, and philosophy of the modern investment club movement. Anything you see here is for illustration or demonstration. No investment recommendation is intended. You will hear our opinions and interpretations. Please make your own decisions. If we own something, we will admit it, especially if it's got a positive relative return. We're really quick to admit those. And again, make your own decisions about what resources make sense for you. The roundtable is now, what are we, about a week out? Or is it more than a week, Ken? I know it's a week from today.
It is. It's going to be a little bit earlier because of the calendar. It's going to be on the 26th of March. So it's exactly a week from today. You're right, Mark.
Okay, so we'll begin preps for that. If you'd like to be added, this, by the way, if you're not familiar with the roundtable, we'll mention it here. Show you some statistics, but it's a gathering that we do a webcast once a month. We've been doing it since 2010, and just sharing some ideas, and some of them worked out pretty well. So if you want to get it on the email reminder list, send an email to nkavula1@comcast.net, and we'll take care of that. We do not have a reminder list for bull sessions at least not yet, only because I don't have enough hours in the day. That may change, but for now, we do not have that. If you like copies of the slides, or if you have any questions, or even more importantly, suggestions for future topics, our 2 email addresses are there. Don't be afraid to use them. Don't be bashful. Ken, any other thoughts?
No, except mail has picked up in the last couple of weeks. Email to my email address. I'm trying to keep up with it, folks, but after the stock up that I did last week, I was kind of dumped on with a couple hundred emails. So just be patient. If you've emailed me with a question or a comment, I will get to you and respond. I hope I'll get it covered up and fixed up in the next couple of days here.
Welcome to my world. And in fact, I'll do a second public service announcement. I do this from time to time. I respond to virtually all emails. So if you've sent me 2 or 3 emails and you haven't heard back, I'm not getting them. And the reason I bring this up is internet service providers and browsers, or I'm not even sure how it actually functions, they block email. So it can literally go into the dumpster without being seen on one end or the other. So always be aware of that. And again, if you send me several, I never ignore email. Now, sometimes the inbox gets full, but I'm pretty up to speed on it now. So if you send me 2 or 3 and you don't hear a response, there's something wrong. All right. Well, Ken, here's our check-in on the market.
We're getting a note from our friend Len, who does a lot of our backroom finding of fact for us. And he's telling us that the Free Press has announced the opening of the Livonia location. That's right outside Michigan by the airport. And it's going to be opening very, very soon on Middle Belt Road. So you and I'll have to take a field trip down there the next couple of weeks, okay?
Sounds like we might have to do a simulcast or whatever they call it from on location, huh?
And Len would like us to review the chocolate cake, all right?
Okay, we can definitely take care of that. All right.
That sounds really good. Chocolate cake?
Yeah, and as a Portilla shareholder, any business that any of you out there bring to us is greatly appreciated. All right, here's our graph of the market. Again, the green bars are reflective of the 1,700 stocks in the value line standard edition. It's our measure of one of our measures of the stock market. You can see that the squiggly lines are the return forecasts according to either value line or manifest investing, and they both are hovering right around 10% right now. We are coming up on the end of the first quarter, so Ken always likes to watch this. That light green bar will turn green and be locked in time. We're right at the blue line. There are a few things on sale out there, but not everything on sale. Your thoughts, sir?
Just that when those green bars fall below the blue line, it's easier to find stocks you want to buy. And as it hits the blue line, then it goes above, it's harder. It's not rocket science.
Nope. So 10% for the average stock. Let's check in real quickly on the groundhog results as of today. You know what makes me sad, Ken?
That you're not on the list?
Ding, ding. I'm not even sure where I'm at, but I'm not in the top 40. And when I can't stretch the top 40 to get me in it, it's really painful. But Ken, I'll let you pontificate about what's been going on.
Well, it's been a rough week. My portfolio, my personal groundhog portfolio, dropped almost 3%, but I only fell 2 places in the standings here, down to 24th place. So a lot of you dropped right along with me, okay? What I really like to see, Mark, are the 9 investment clubs out of the top 40, and especially some of the big movers. Our friends, the Broad Assets from the St. Louis area, have really made a charge since last week, going from 60th to 37th. And I'm seeing a lot of clubs that are kind of new to the whole groundhog idea here on this list. So it's really, really interesting to watch the emergence of clubs as top performing portfolios. that hasn't been true over the history of this contest.
Yeah, and it's neat to see Curtis and Andrew, some of our fairly young participants, back as defending champions or prior champions. And let's do a small commercial here, Ken, for the Broad Assets of St. Louis. The Mid-Michigan chapter is going to do the roundtable in cooperation again this year with the St. Louis chapter of Better Investing. And one of the themes that we'll be touching on will be this topic of how did they do it? The Broad Assets winning 3 out of 4 years a few years ago, and a little talk on launchpad investing. So I think we'll have some fun with that.
That's the April session, Mark, and we're going to change the time of the roundtable from the traditional 8:30. We're going to back it up starting in April to 8 o'clock. So make a note of it right now, folks. Last Tuesday in April, we're going to partner with the St. Louis chapter, and that roundtable will begin at 8, as will all future roundtables from that point. So I'm looking awfully forward to being with the St. Louis people. That's always a great session. And I think we're going to have one of the St. Louis directors with us again, aren't we, Mark?
Candace Baker is coming back for another shot at the basket.
Great. Terrific.
All right, so we do have a club in the number 1 position. That's the Four Corners chapter. If you see the name Braun or Meter, which you will see from time to time in these standings. And by the way, number 14, I'm pretty sure McNary is part of this club. Pretty nice set of selections there, and they are holding down the lead today. All right, Kathy's off the chart. She's actually below me. And the monkey has dropped all the way to 144th, so all things are good. Here's some of the cause. You'll notice that these are the 16 most frequently selected positions for the Groundhog contest this year. And I know it warms Ken's heart to see this nice mix.
Now, Mark, you started this dashboard with how much value for each one of the heavy hogs?
I'm guessing it's 16 stocks there. I think so. So it'd be 1 million divided by 16.
Okay.
Which is that? 62,500, I think.
Okay, so that gives you a rough idea of those that are a little bit ahead of the market and those that are a little bit behind the market.
So the reason I'm off the chart is InMode and Ardelyx are part of my selections fairly frequently, and the ones up at the top are the ones taking off a bit. So the pretty strong performance at the top of that chart. So that's the reason for the.
I'm awful happy to see one of our roundtable small choices make the top of this list, that Shockwave Medical. I'm awfully happy to see it not only make the list, but perform as well as it's performing.
And I'll disclose it, I don't know how much Matt owns, but Matt is a fairly close advocate of Shockwave. So he's written a few things and posted pretty much a continuing series on the Manifest forum.
I'm a owner of Shockwave as well, Mark.
I first bought it late 22, so I'm pretty happy.
Good stuff.
I've only owned
It's been a ride though. It's on its 3rd wave. If you look at a 5-year chart, it's been in this level before twice. So maybe this time the elevator keep going up.
Yeah, escape velocity.
Yep.
All right. Anything else here, Ken?
I don't think so, Mark.
Kim is happy anytime that PayPal's in the top half of any list on display. So.
Hey, I got PayPal and Ardelyx went from what? 756, and it was 810 the last time I looked at it today.
Not that we watch our stock prices very closely,
but
we all need to spend some time in the confessional for that. So, all right. Here's our current Buttonwood Bulls. We probably will not take a look at this today or not do any buying or selling unless we unanimously suddenly decide to buy some Nvidia. But this is the up-to-date portfolio. We did sell the place holding Vanguard Technology or Vanguard Growth Fund. We made a couple dollars on it, and now we are in position to buy the last 4 or 5 positions here over the next several bull sessions.
I
And
think a great thing for our audience to consider, Mark, for the next bull session, maybe 2 bull sessions from now, is whether or not Visa is worthy of a full holding. We accumulated this little tiny piece of Visa by a gift from the brokerage, and now we have to make a decision. Do we actually, raise this position up to somewhere around the 6.5–7% that the rest of the stocks are in? I think it'd be a great discussion because we don't have a whole lot of really large companies in this particular portfolio. So I think it's worth a talk, at least in the next couple of weeks.
yeah, and it's the type of company that, the names Aflac, Johnson & Johnson, and a few others come to mind. They do not explode to incredibly under or overvalued. So sometimes you just have to settle for a modest level of being on sale for a company like Visa. So that perhaps that's part of the discussion, Ken.
Yeah, we could add Costco and Procter & Gamble to that list, Mark.
Absolutely, especially Costco.
Yeah.
I'm still regretting I moved from one portfolio to another about a year ago with Costco. I forgot to rebuy it.
Not a good idea.
Well, Mark, I think each of us, Ken and I and Matt, will all say we have a stock that we shoulda, woulda, coulda.
Yeah, Sean is keeping a pile. He keeps track of it anytime I say shoulda, woulda, coulda. All right, so let's talk about today's topic. Here is a look at our performance perspectives. Again, we like to point out, notice that the round table is still hovering around a 5% advantage to the market. We have been damaged by Ardelyx and its friends. So this is down a little bit from where it was, but still pretty good. 16% over the last years. Inception was 2010. So that is the program that I mentioned just a few minutes ago and what Ken was describing. Again, 1 week from today is the March session, and then the last Tuesday in April is the April session. So we just like to stack these up and show how they look. The ones at the bottom are basically if you're going to buy an index, this is the type of stuff that you're talking about. I did want to note, Ken, that notice that the value line arithmetic average has climbed back up in the index standings. It had been a little bit down in the dumps, and it's back up there now. And the other thing that we like, go ahead.
For a number of months last year during the roundtable sessions, it was actually red compared to the rest of the chart.
It was
down there with the mid-cap, small-cap numbers,
mm-hmm.
and they have improved greatly as well, Mark. We should note that.
Mm-hmm. Yep, we were right back in the third quarter of last year, and that's not a humble brag. We just simply pointed out that there was opportunity there that has manifested, no pun intended. These stocks up here at the top include the top 7 most widely followed companies by Manifest Investing subscribers. And there's a special entry here today. How many of you out there in the audience would have guessed that there's a stock that has performed better than Nvidia over the last, since the turn of the century, basically? And that would be by a narrow margin, Amazon. So interestingly enough, and again, Amazon is in the round table thanks to Hugh McManus, and has actually served us pretty well. Any other comments here, Ken?
Well, I just think, Mark, if you can look at that list of 8 stocks right there and say to yourself, I own 5 or 6 or 7 or all 8 of them, then you're probably a fairly happy investor at this point.
Yeah, I own Amazon, Apple, Visa, Microsoft. Microsoft is probably our largest position in the family portfolio, and Google. So that is a pretty good cross-section of those companies. And
well,
yeah.
Between my wife's IRA, my IRA, and our taxable portfolio, not counting the clubs, just in those 3 portfolios, we own all 8 of those. So I'm very pleased. I'm a very content investor.
Good stuff. Yeah, and again, we point out, the round table is a great demonstration. So is Tin Cup of these principles coming to life. And we do everything right out there in the open, so you can watch the the evaluations, the discovery, and how the positions perform over time. So let's go ahead and get into this hurricane. I thought that kind of looked like a hurricane picture. Blowing my soap suds around in my front yard. Nvidia, what a beast. And a lot of questions on the forum about it. There's a lot of questions in the field of investing and on the planet about it. So if you're ready, Ken, Matt, Kim, let's dig in.
So put your seatbelts on, right, Mark?
Here you go. In the Manifest Forum and with our weekly updates, we do provide a look at how our roundtable selections have done. So you can see that we have selected NVIDIA 3 times, and Herb Lemkool has really enjoyed those 2 selections by him, and I actually selected it back about 5 years ago. And it was back where somewhere in here, where did it actually come back down a little bit. We'll talk more about that. But that is a phenomenal increase. And pretty happy about it for the roundtable. And Ken, I'm pretty sure that you mentioned that your family was doing some research back at that time. So if you'd like to do a little humble bragging.
Well,
Also,
my wife and grandson should be given dual kudos for really discovering and researching NVIDIA. And we have a holding that's approximately 7 years old, with a average cost per share of about $20 a share in my wife's IRA. And then the family club is having the same problem I spoke to earlier in the session. Our family club right now, about 32% of the club's portfolio is sitting in NVIDIA. My grandson took the idea from my wife, and at the first meeting that he attended as a member, as a partner in the Wolves Investment Club, my grandson suggested that we put some money into NVIDIA, and he wasn't shy about how much money he wanted to put in either. And it now represents about 32% of the portfolio.
whoa.
And that's after I sold off a quarter of it and took some capital gains, which I then took a nice beating from a couple of the other family members. So I have a broad back. I can deal with that. I'm thinking about, Mark, how we felt when Herb chose NVIDIA in June of 2021. It was trading at $200 with a PE value up somewhere around 55, 60, 65.
Yeah.
And I smiled to myself and I said, well, that won't last. You know? And I'm right, it didn't last. It went the other way rather than I expected. And then when Herb chose it again a couple of years later, 2.5 years later, at just under $500, I thought, well, my goodness, we're being kind of foolish now, aren't we? And again, a massive wrong. So this is, I guess I've never lived to watch a stock do what this particular stock's doing. The one closest in my mind is what happened to Apple from the depths of the Great Recession in 2008 and 9 until about 2 or 3 years ago, when it just took off like a parabola, like a rocket, and just took off and ended up holding huge positions in so many club portfolios around the country. We were inundated at that point with questions about what do you do, and the same thing is happening again today.
Yep. And in fact, I included this because you can go back and listen to that December 2018 roundtable, and I may have actually referenced your grandson and that activity, because I also was basically bringing it because of their position in the gaming environment and the power of these chips. And as I recall, we were talking about all of the supercomputers and data centers. We're going to really be needing a bunch of NVIDIA product or equivalent. And so that was part of that discussion back then. And wow, I have one more.
That was part of what we referred to, Mark, as the hope per earnings ratio. So
It probably was.
It just all came into fruition. Our NVIDIA purchase in the family club dates to 2016, late in
Okay.
2016, about 2 years prior to this purchase here. But my wife and Ethan had put it into her IRA 6 or 8 months before that even. So
It's good fun.
quite a vision that came true. Not all of the speculative visions come true, but this one did.
Yeah, for every one of these, though, man, it can offset a whole lot of other heartache. You can see the exploding stock price. Don't need to talk anymore about it. The question is obviously, is it a buy, hell, or a hold or sell at this point? Here's another look at that long-term price perspective. You can see that relatively long flat spot through the 2010 to 2016 timeframe. And keep in mind, these guys were operationally and fundamentally executing quite well. So anytime we see a company in this type of a situation, your ears should probably be set on fire and the hair standing on the back of your neck as a potential opportunity, just in general. Okay, we are up to a point where Len Douglas's money flow index long-term perspective is up at that high level, but look at how many times it's done that. And these guys are obviously a qualifier for Nicholson's rule about be very reluctant and slow to sell a stock with a double-digit growth rate. So we'll talk about that too.
I wonder how many people, Mark, were aware of what was happening in late 2022 with this company and were willing to ride the price down and purchase it around $100. It's very interesting looking backwards and asking the question, you know, everybody can be smart when the price is taking off and going up straight. But how many folks were aware of what was going on and were brave enough to enter into the position? And again, I'm pointing at that trough in late 2022 right
Here.
there, where the price was maybe you know, give or take a couple dollars from $100 at one point.
Yeah, it went down quite a bit. In fact, I'm reminded, Matt already talked about this, so chime in if you want, Matt. Southwave, in order to continue to hold, Shockwave, in order to hold that position, he's had to go through something that probably looks a lot like this. And of course, he's hoping that the right side of the chart is in his future.
Absolutely.
So I think what we may do as April 1st approaches and the national holiday for the Motley Fools is David Gardner does a heck of a presentation on holding a company like Netflix. And it will have a chart very similar to this. Maybe we'll take a closer look and just examine some of his thoughts on holding on to one of these roller coasters or whatever you want to call it. Good stuff. All right, here's a look.
Meta is another good example, Mark, that we might at some point bring into the conversation.
Facebook, absolutely.
Yeah.
All right, here's a look at the company. Again, this is one that really challenges all of us, including analysts, professional analysts, the rhinos out there. This is the most recent update that's in this week's update from batch from Value Line. And we basically are looking at a company with about $70 billion in sales. In other words, somewhere out here in this time frame, chucking around 70 billion in sales. And you can see that if you go back over the years, you're talking about a low to mid 30% growth rate. Now I know, Ken, there are times when you have lost consciousness talking about a company at these levels, so I want to be careful here. That's a fantastic growth rate, and you got to be doing a lot of things right to perpetuate that, and they seem to be. We'll talk about that. But wow! But you can see that that long-term growth trend it has its zigs and its zags. It's in a cyclical industry, but 30% is not out of the question for a company like this. And that's really foreign to a lot of us. Notice that the quality is really trucked along close to perfection. And by the way, here's when Natalie and grandson were buying back here. It's still up here pretty robustly, continuing to challenge a lot of things. So first milestone, 30% growth. The second, and we'll take a look at this in a little bit more detail, the projected net margin has now appeared to, go ahead, Ken.
Mark, that's the number that sticks out to me as being just way over anything that I would expect from any company, anywhere, anytime. That
Hmm.
when a company can tell me they're going to make 50 cents plus on the dollar on the products they're selling, I'm thinking to myself, my goodness, you have something good, something desirable.
Yeah.
And that's what this company has.
I believe Apple has been renowned for trucking around in the 35 to 40 range. So yeah, you're talking about that type of level. Here's what is basically being described as being feasible or viable, however you want to talk about it. The company has matured and basically locked down a certain niche in the market somewhere in the realm of a 50% net margin. So that 50% net margin actually delivers what to many of us is an astounding number. Again, keep in mind that when you look at value line, you're going to see a number, I believe, closer to 35 or 40. This is basically a little bit out from that because this is always 5 years. This is the forecast for 3/19/2029. Out here, out in this range here somewhere. It's very challenging. Isaac Asimov pointed it out. Very challenging for the human mind to even get their arms around that type of a number. And but you see the earnings results down here, and they do zig and they do zag, but it's not inconceivable that they could actually pull this off, especially if they do maintain that growth rate and achieve and maintain those net margins. So it's just phenomenal. Here are the earnings type growth numbers that you can basically audit your studies against, somewhere in that 40% range, which is just, again, Ken just went unconscious for the second time in this session. All right. So,
what Mark is, well, I'm waiting for the slide, Mark, where I can make that point. So
okay.
we'll
All
get
right.
there in a moment. Okay.
I'll tell you what, I actually knocked this one down just to keep the projected return close to the projected return on value, the par close to the prove. You can defend a higher number than 25. Why do I say that? Based on this picture here. And I don't pay a lot of attention to PE, but um, there you have it. It could get there. So even at that number, you're talking mid-teens. Certainly not a sell. Certainly not a sell according to the wisdom of Nicholson, who said if you're dealing with a company growing at greater than 10%, they certainly qualify for that. You want to be very reluctant and slow to sell this one unless you have to do it for a portfolio management situation, or if you need to buy a new furnace. Go
Mark,
ahead,
go
Ken.
back one slide for just a moment, would you?
Back to this one.
Yeah,
Okay.
and look at that projected PE ratio out to 2028 there. I'm going to read that number as 37 or 38. I think that's certainly within the range of the earnings growth for this company. And I'm saying to myself, well, that gives me a PEG ratio of 1 to 1, and that's supposed to be a great buy at that point.
I hear you. It's definitely intriguing when it comes to that. All right, so 13%, a little bit of dividend they are kicking out, 13% on the projected return. Their financial strength is 98. Now their EPS stability, basically the straightness of that blue line is actually a little bit low. We basically are looking at this situation for any company when we're looking at the stability of the profitability. Um, in other words, it's erratic, but it's erratic and going up. So however you want to think about that, that 63 actually has upside, especially if they manage to maintain. It's not what it looks like. But even with that, you're still talking about a top tier, top of the top tier quality ranking company. If they achieve those projected operating margins, which are again about 10% higher than the net margins, you are looking at a situation where the company can achieve a projected return about 9 or 10%. Now, the other thing that's extremely fascinating for a capital intensive company that has some debts and liabilities, they've got more cash in their wallet than the total obligations they have as a company. Just let that sink in. It's a massive company, spending a lot of money, and they have more money in their wallet or checkbook than their total debts. and obligations. That's just stunning. It's just stunning. That's why this company gets a lot of attention. So again, the sell point would be with a 0% selling return by virtue of their growth rate and quality and everything else, not to sell until up around $1,600. They're currently around 800 something. They do have some debt, but look at the type of debt that they have. Anybody out there want a 2.7% interest rate? Okay, I mean, they have been pretty hot, so they're in the middle of their price range. But here's the other thing I want you to notice and not feel so lonely if you've been confused by this company, because I have been. I don't think I'm the only one. Value Line says, huh? Morningstar says, huh? At least 20% overvalued. And then one that completely stuns me out of my chair. This one, because the analyst consensus is notoriously and persistently optimistic. And I checked this number 3 times because I couldn't believe it. They think this company is fairly valued at 580. I think they have to update their numbers. And when they do, it'll get crazy again. But they basically, as a consensus, I think there's 40 of them covering the company, think it's 50% overvalued. I'm not sure about that. Anything else here, Ken, you'd like to underscore?
Well, go to that next slide, Mark, that shows member sentiment from the BI site. Oh, that's not the next slide. Okay.
Do you want to go all the way to that? Do you want to make a point now?
Well, yeah, I just want to make that point that that we were, my volunteer work goes all the way back to 95. So I've been doing this better investing stuff for a lot of years. And I still am confronted with rules that at one point in the late 90s, early part of this century, were promulgated by Better Investing as being rules that all investors must follow at all times. I encountered one of those rules last night when one of the people making a stock presentation to my large stock club indicated that he never projected the high PE above 30 because that was what Better Investing said they should never do. And so we had quite a discussion about that. I think a lot of you can remember first learning about the SSG and hearing the statement, never project earnings and sales above 15% because companies cannot achieve that for any period of time that's measurable. And here we are with our community of 521 studies. I'm reading that right off of the chart there. And they're projecting the sales growth at 30%, 29.1 or 5, depending on mean or median. But to watch the community change its thought process and going from this 15% idea to let's actually look at what the company is doing and what the company has the potential to do. And when a company can do better than 15, let's not be afraid to project it better than 15. And I think that's part of what might be coloring the analysts' opinions right now that have some normal reticence to go above certain values. And Nvidia at the moment at least seems to be breaking so many of the rules about size and growth and everything else that you're interested in. I think maybe that explains some of the fair value calls that are being made by the analyst community at the moment. Mark.
Absolutely. Absolutely. I notice here, and again, I almost lose consciousness here myself, the PE sentiment from this collective of relatively conservative investors is 30 to 60 down here. And there are people in your clubs out there that wouldn't believe that until you show it to them. All of this basically breaks down and points to a return forecast in the teens. So take it for what it's worth. You basically have a community conservatively 99.9% of the time handing this back to us. So interesting stuff. The next question that comes to me, Ken, and we'll cover these slides, was this one. There's the confusion over the fair value over time. I'll let you do that on your own. I saw the stuff, and this is about a week ago. So I started digging and trying to find a professional discussion of the situation with Nvidia, the opportunity. And I found a panel of 4 professional analysts I'm not going to tell you where. Um, but I just sat there in utter amazement as they began to go through the operating characteristics of the company and rate them on this scale. And I hope all of you out there have that same feeling in your stomach of being abandoned or alone. It was at that point I realized I was going to have to do this by myself or ask Matt or Marie Frank to help me out.
It's
I
like
mean,
sitting in the doctor's office when they ask you, what's the pain like, right?
exactly. So anyhow, so my only relevant experience that we're going to launch into here, I was a member of the Mutual Club of Detroit. We had a very large position in Qualcomm back in the mid 1990s. I so vividly remember the price going from 300 to 1,000 during Christmas break between the 25th and the 30th of December, 1999. That's my only comparable relevant experience to this. I do remember, we're not going to go into it now, but the extensive discussions on not generating any capital gains right there. We don't want to talk about that. What I want to show here is, if these situations are comparable, there is some serious, at least it rhymes. It's confusing. The royalty situation at Qualcomm is confusing to the analyst herd. But the point to be made here is even with where we're at on the left-hand side of this chart, this was in front of the company in years going forward. So that's the way I kind of place this in perspective and continue to ask the question, what's going on at Nvidia and how many chips can they make and how many chips can they sell? And I don't want to go with yucky or yummy on this. Now, Matt pointed out earlier today that these guys are out with, am I reading this right? I think it's on the next slide, Matt. This chip that they just came out with, which is a collection of chips, there it is right there. Wow. I mean, these I'm not going to order too many of those on my own for my supercomputer.
Yeah, it's no longer, the big point is that that's out of range for what would otherwise be a video card on your PC at home or in your gaming machine at home. There may be some architectural similarities, but they're kind of they're definitely going to some kind of new level.
Yeah, and
it's its own beast and not a derivative anymore.
As I understand it, and I've been kind of away for a few days, there's basically what is being referred to as a Woodstock of AI going on, attended by tens or hundreds of thousands of professional investors. And NVIDIA has basically knocked it out of the park with the things that they're describing. So there's the boss man showing you that chip. Here are some of the other things that are going on. This is from this morning. And you can see just how assertively things are changing. Goldman raising their price targets. You can see the range in opinions right here. That is all over the map. So again, if you're scratching your head and feel a little bit confused by this, you're not alone. And here are the analyst consensus estimates for 2025. And notice that they are projecting increases in basically operating margin, and they're in a real sweet spot right now. So you can go read more about that at that Game Changer. It's kind of a Investors Day type presentation. It's worth it. And here are the estimates going forward. So again, you can see this almost explosive number. Keep in mind, these are the conservative part of the pack. And look at the numbers they are talking about down here for the types of margins. So a lot of stuff going on here. This is another reason that our groundhog standings have changed quite a bit. There are a few people that had Supermicro in their portfolios. And then the ultimate contrary indicator. I don't want to beat up on Jim too much, but he's got quite a track record for when he says they're going up, they might take one of Matt Spielman's swoons. So anyhow, so I'm sitting there again. I don't want to do yucky and yummy. I want to understand this industry a little bit better. You can go back to Kevin Gologli's semiconductor presentation to understand the industry a little bit better. I wanted to look at who are the top companies by market cap in the semiconductor industry, and you can see right there on the left, Nvidia is right at the top. Taiwan is right up there with them as the two gorillas in the marketplace. I put this here just to give a frame of reference for what that net income is for Nvidia. So it's up in that 50% range here. This is the range for the industry, the net income for the industry. So these guys do represent about 10% of the market, and the total market being pretty compelling. Now, a lot of companies on that list on the left are community favorites in one way or another. Anything jump off this page at you, Ken? Here's a reference PE ratio that says that.
Well, just the fact that if we would have put this list together 4 or 5 years ago, it would look considerably different than it does now.
Mhm.
And I marvel that Intel has not fallen to 6th place and is probably in danger of falling even further. Witness ARM Holdings on that list and a
Well,
couple of other real high growers.
these are both charging pretty hard.
Yep.
They'll catch them unless something changes.
Yeah.
So anyhow, this just gives kind of a frame of reference for how big the industry is. Again, they're only at 10%. The other question that I had when I tried to find something of value on the internet is, and I wasn't able to, so I just simply went back to White Chart. I want to understand: are these guys maxing out their factories? And they're currently, as it shows you right here, this is on the industry now, at approximately 80%, but that's certainly not inconsistent with where they've been for the last 40 or 50 years. So they actually have more capacity to put to use. And we were talking before we came online, if Nvidia gets the opportunity to sell more of these very high margin products, they've got some lower margin products that they could possibly divest or convert to a royalty stream. So that is something also to think about, that they may have that management challenge and opportunity in front of them. But the answer to the question is, are they maxed out? This tells me probably not. Anything else here, Grabby Ken?
Well, yeah, I would imagine this isn't a pure play graph. It says also related equipment, so it probably includes equipment used to make semiconductors, but still,
Sure.
it gives a pretty decent picture that there is room. And historically, in the last 30 or 40 years, there's been a number of times when the when we've used more capacity than we're using today. So.
Mm-hmm. Yeah, and the cycles are pretty obvious there.
Yep.
So here's a look at the overall worldwide semiconductor sales. Again, just to get a feel for, what are we talking about here? Now, this is for the last 20 years or so, you're looking at a 6 or 7% growth rate for the industry in general. So at least it's a robust field of opportunity, and you can see that we're not even back to the peak here. All right, so pressing on, here's another piece of information. I think it's got limited sample size, as Sean would point out, but at least it is a piece of information. This is where Nvidia is playing, and these are the expectations for their field of opportunity going forward. And for this particular slice of the field, they're projecting at about a 20% growth rate. So you can dig in a little bit deeper. The Fool.com article that included this information is referenced at the bottom. Any thoughts on this, sir?
Well, except that I've also heard, Mark, about a new kind of AI that they were talking about extensively yesterday when they were doing all the press on Jensen Huang and everything he was doing. I had never heard of inferential AI, but evidently it's a brand, even a newer than the generative concept. And inferential means not only will they be able to generate different things as are listed on the paragraph right here, but they'll be able to make inferences between the things they generate and perhaps come up with rules or come up with trends or whatever you might be looking for in this whole concept. Inferential thinking is pretty human-like.
Mm-hmm. Yeah, and in fact, I'll cite Sean one more time. For those of you that don't know Sean, he hangs out with us here, and he's an IT professional for several years now, and he's paid attention to this whole thing. His first comment was, Ken's absolutely right with the inferential thought, but there's also a field of thought that machine learning is not new. And in fact, I go back to some research I had done on neural networks back around 1990. So there are, again, this is in the realm of potential competitive threats or alternative solutions to an Nvidia type solution. They're out there, and you just have to keep your finger on that pulse. I just got a big headache from neural networks back, 40 years ago, 30 years ago, something like that. But it is out there as a potential alternative or competitive threat. Always the type of thing that you want to do as you're thinking through, what is possible.
Well, and as a little sideline, I think just in any stock, I want everyone to remember that change is constant. Everything is going to challenge everything else, but who's going to be profitable on it? So that's why we need to be aware of what's going on in whatever our stocks are, or seeing something that is going to be disruptive, because who's going to be profitable out of this?
Absolutely. All right. Anything else on this one, Ken? Are we good?
No, just a tidbit, Mark. It was very interesting to listen to some of our stock presentations last night, because every single company that we referenced was doing something in the AI field. That says to me that AI has become a buzzword that must be used in any discussion of what your company happens to be doing. Sort of like .com was something that must be used in the late 90s if you were going to discuss your companies, no matter if it was a grocery store or anything else. You had to figure out how .com was going to impact it. The same thing's happening with AI. I would urge everybody that when a company says they're involved in AI, you take a little bit deeper dive and find out exactly what are they doing with AI besides just thinking about it.
Absolutely.
Yeah, and the FCC just took their first action on a couple smaller companies that they thought were stretching the truth.
Okay.
Very polite way to say it, Matt. Okay.
Good stuff. All right. So I think we can basically close down the discussion at this point, other than saying, I think the future that we have at least envisioned for NVIDIA is possible. It's not immune from threats, as we've described. And I do think spending a few moments with what does it take to hang on to a company like this as challenges surface, and maybe the David Gardner thing will be a little bit of a help there. So hopefully this has been some help as how to walk through and comprehend the environment of
And Mark, we're
opportunity.
also getting comments from our audience making the point that NVIDIA does not actually manufacture the chips that they're talking about. They design those chips, but they do not manufacture the chips. In fact, the contract has been let to Taiwan Semi for the manufacture of the brand new Blackwell chip. So we need to keep all of that in mind too, that we're still looking at a relatively few foundries throughout the world that are making a lot of these chips. They're not designing the chips, but they are making the actual product.
And I'll go back to this experience because I really think it's powerfully relevant. Back in 1999, some of you will remember this, Qualcomm stopped making cell phones. What they didn't stop doing was collecting royalties from everybody else who makes cell phones. And that was what was so terribly confusing. Again, there are some parallels that rhyme here that just kind of nudge me to continue learning more about this type of opportunity. All right, so we'll come back to it if we need to. We would appreciate any questions or any follow-up that you guys would like to see. We do archive all of these presentations if you want to go back and review any of the segments. We also put a PDF of the slides on the Manifest Investing Forum under the bull session topic. And if you're not a Manifest Investing subscriber and you'd like a copy of the slides, just send me an email to markr@manifestinvesting.com. We'd be happy to send you the slide deck. And Ken hey, the tub shot is off the slide, so you're a little bit happy.
All right.
No more hot tubs.
I would just like to suggest also that if you're coming to this page to view one of the things, please just take a moment to hit the subscribe button. You won't be inundated with stuff from YouTube, but you will get a reminder every time something new is posted to this individual particular channel. It's a nice thing to have happen in your email, and on top of that, we're getting some benefit from having a number of subscribers. So if you come here to view something, hit subscribe for us. Help us out a little bit, would you?
Absolutely. And by the way, this one's a hoot. If you haven't checked it out yet, show me the money. All right, Ken, what are we going to do a month from now? Not even quite a month.
Well, in a month, we're going to continue our Getting Started series, part 2. We did 3 sessions in January to start the Getting Started. I've done a ticker talk and a stock up to deal with some of the issues in watching stocks and in dealing with reading SSGs, and we're going to continue this process for our novice investors, for our inexperienced investors, and especially for our investors that have been around for quite a while and still find the SSG daunting and find interpreting the numbers on a stock selection guide or on a stock analysis, find that interpreting the numbers takes more than they're willing to put in sometimes. We're trying to make it easy. We're trying to make it something that is accessible to lots of people, not just a select few. So on April 10th and 11th, we'll be doing 4 free webinars. The first one is entitled Gaining Confidence, where we'll read some SSGs that somebody else has prepared. And then we're going to talk about narrowing the field, or we're going to talk about using screeners and really understanding the numbers behind a screeners and coming up with a fairly robust screen of ideas. And then in the third class, the contenders, learning how to take a screened list, maybe 30 or 40 companies, and reducing it to a series of 3 or 4 real contenders, which you can then study in depth. We'll end the series of classes with a Let's Talk Stock panel. It's going to be Ken, Mark, and the women. So we have Kim Butcher going to be on our panel. Ann Manning is going to be on the panel. Susie Artsberger from BI headquarters will be on our panel. And I'm coming up with the last name. I'm having a problem. Mark, help me out.
Is it Charlene or?
Oh, Charlene Hanson from Traverse City will be on the panel. So we'll have some really, really good stock pickers on that evening. You'll get at least 10 ideas. We hope to give you a few more than that. And it should be a kind of a nice way to spend a couple of early evenings and later evenings in April.
And the one thing I would add and just reinforce, if you're a relative beginner to investing, don't start with Nvidia. All right, so with that, we try not to let our friends be average investors. So this is just our reminder. We're here to deliver ideas. Again, if you'd like copies of the slides or if you have any more need for information, send me an email, markr@manifestinvesting.com. And this is just a summary that I attached to the end of the deck that basically tells you why we do what we do and challenges you to come along for the ride and learn. So with that, Ken,
Look at that, Mark, 59 minutes. We're right on schedule, okay?
Anything else in the hopper?
Nope, we've kept up with the questions. We've gotten some humorous comments, and I think we're ready to call it an afternoon, and I hope that we see everybody again a week from today.
All right, in that case, I'll get out the mop and get to work on my soap suds.
Good afternoon, everybody.
Take care out there all. Thanks, Kim and Matt.
All right. See you guys later.
Bye, guys.